Today, we are going to see problem number 2 of partnership final account. Here, I am going to share the screen with you. In a Google Sheet, I have already taken a problem and its a solution. From the following trial balance and adjustment given below, you are required to prepare trading and profit and loss account for the year ended 31st March 2019. Balance sheet as on that date in the books of Shilpa and Katrina. Trial balance as on 31st March 2019 is a given. On the debit side, land and building is given. It is transferred to balance sheet asset side. Furniture, balance sheet asset. Sundry debtors, balance sheet asset. Stock, it is the opening stock, trading debit. Bad debts, profit and loss debit. Printing and stationery, profit and loss debit. Wages, trading debit. Salary, profit and loss debit. Carriage inward, trading debit. Sales return, it is a less from sales. So it is goes to trading account, credit side, less from sales. Drawings, it goes to liability side. So it is less from capital liability side. Same less from capital liability side. Then discount. Discount is given on the debit side, so it goes to profit and loss account debit side. Advance given to Shahrukh, it is asset, so balance sheet asset side. Cash in hand, balance sheet asset. Cash at bank, balance sheet asset. Interest, it is a debit, so profit and loss debit side. Commission, profit and loss debit. Royalty, trading account debit. Purchases, trading debit. Now the debit items are over, so we move towards the credit side. On a credit, first capital is given, so it is goes to liability side. Second capital of Katrina also goes to balance sheet liability side. Bills payable liability. Bank overdraft liability. Purchase return, it is a less from purchases. Trading debit. Sundry creditors liability. Bank loan liability. Interest received, it is given on the credit side, so it goes to profit and loss credit. RDD, we keep RDD as it is because there are some adjustments on the RDD, but this RDD goes to profit and loss account on debit side, so we'll keep RDD as it is. Next is the sales trading account credit side. So all items are being posted. We'll come to the adjustment part. Here is the first adjustment. Stock in hand was valued 58,000 on 31st March 2019. So this is a closing stock. First effect, trading credit. Second effect, balance sheet asset. Now outstanding royalties rupees 1,500 and wages rupees 800. First effect, trading debit add to particular expenses, means add to royalties and add to wages. Second effect, balance sheet, liability side. Now come to the adjustment number 3. Salary paid in advance to staff rupees 2000. It is less from salary. Second effect, balance sheet, asset side. Next, create provision for bad debts rupees 1000 and reserve for doubtful debts 3% on debtors. For this adjustment, we have to go to the solution part. I have prepared the solution for you. Here on the balance sheet, sundry debtors 40,000. From this 40,000, we have to less new bad debts 1,000. The amount comes to 39,000. On this 39,000, we have to calculate 3% RDD, that is 1,170. If we less it, outer column 37,830. This bad debts and this RDD both goes to profit and loss account on debit side. Here already old bad debts are there, 400 rupees. We have to add new bad debts 1000, new RDD 1170. The total of these three comes to 2570. From this we have to less old RDD, which is given on trial balance credit side. This old RDD 1000 is to be less, outer column 1570. Now come to the last adjustment. Depreciate land and building by 5% and furniture by 10%. Now land and building is on asset side, furniture is also on the asset side. From this you have to less 5% depreciation, here you have to less 10% depreciation. The second effect of this two depreciation goes to profit and loss account on debit side. Here land and building 1890, furniture 1725. Now take the total together, this amount comes to 3615. Now if you solve this problem carefully in your notebook, the picture will appear like this. For trading account, the total of credit side and the total of debit side. The total of credit side minus total of debit side, you will get gross profit 51,180. The same gross profit is to be brought down on profit and loss account credit side. After taking the total of credit side and minus the total of debit side, you will get net profit of 35,465. Now the profit sharing ratio for the partner is not given, so both the partners will share the profit equally. Shilpa share 17,732. Katrina share 17,733. This profit goes to balance sheet liability side. It will add to capital and less drawings. The total outer side 60,732. For Katrina, total is 59,733. If you take a total of balance sheet, the total comes to 1,87,265. So in this way, your balance sheet will get automatically tally. If you have any doubt, you can ask me to this number. 9422532826. Thank you.